The FERS Supplement is designed to help bridge the income gap between retiring and qualifying for Social Security benefits. Once your supplement amount is determined, it will never increase, but it could decrease if your earned income exceeds certain limitations. In this video, I'm going to review what income counts and what doesn't count in terms of the earnings limit. I'll also highlight some of the potential implications of exceeding the income limit. However, before we dive into those details, welcome to the Money Briefing. My name is Jarrell Harvey, and I'm with Fedway Financial. On this channel, we cover topics related to personal finance, federal benefits, and retirement planning. So if you find this video helpful, please consider sharing and subscribing. The FERS Supplement is a special monthly payment for certain FERS employees who retired before age 62. The FERS Supplement was created by and is paid by OPM, but it shares some similarities with Social Security. One thing they have in common is a yearly earnings test, which is also known as an earnings limit or income limit. The annual earnings limit for the supplement is always the same as the earnings limit for Social Security. However, it's important to point out that Social Security has two income thresholds. It has a higher limit that only applies to people during the year they reach their full retirement age, and a lower limit that applies to people under their full retirement age. For the FERS Supplement, you should always focus on the lower limit amount. This chart shows the FERS Supplement income limit going back 5 or so years to 2019. As you can see, the annual limit changes each year. For 2024, the income limit is $22,320. This means that you can earn up to $22,320 and continue to receive your full supplement benefit. This earnings limit applies to federal retirees who have met their minimum retirement age, which ranges from 55 to 57 depending on your year of birth. So let's now jump into the core of this video and discuss the different types of income that do and do not count towards the earnings test. I'm going to begin with the different things that do not count against you, because that list tends to be a little bit more lengthy, which is a good thing for federal retirees. This list will not cover all the forms of income that are exempt from the earnings test, but I will highlight the most common income items that may impact federal retirees. The first excluded income is pensions. This includes your FERS pension as well as any state pensions and military pensions. Another item that's excluded is survivor benefits that you may receive from Social Security or from a retirement plan of a deceased spouse. If you are former military and receiving veterans benefits, that income is also excluded from the earnings test. A big item that's exempt from the income limit is withdrawals from your TSP, 401k, and IRA accounts. This also includes money that you're forced to take due to required minimum distributions or RMDs. Additionally, income that you receive from annuities is not counted against your annual limit. Plus, the interest and dividends that you receive from your investments or savings accounts are exempt, along with any capital gains that you receive from the sale of any investments or personal property. Also, income that you collect from real estate rentals are generally exempt from earned income. However, there are situations in which rental income may count towards the earnings test if the income is generated from a business that you actively manage. Some other things that are not subject to the earnings test is the money that you receive from inheritance, gifts, and estates. Along those same lines, income that you get from insurance proceeds are exempt from the limit. If you finally hit the Powerball, you may no longer need the supplement pay, but the windfall of money that you get from hitting the jackpot will not count against your yearly limit. Additionally, any money that you receive or win from playing the slots or betting on sporting events will not count towards your earned income. Additionally, if you're receiving alimony or child support, that money will be exempt from the income limit as well. Additionally, any funds received from other court settlements or service that you perform for jury duty will also not count. And then lastly, money that you receive as a lump sum from your annual leave payout after you retire will not count towards your earnings limit. One other thing that I want to mention, your spouse's income will not count against your earnings test even if you file your taxes jointly. So as you can see, a lot of income that you may receive during retirement will be exempt from your earnings limit. Let's now take a look at the things that will count towards your earnings test. First, money that you receive as employment income will count against you. This includes income that you earn as a salary, wages, tips, bonuses, and other non-cash payments. So this basically covers any W-2 income that you receive on a full-time or part-time basis, as well as 1099 income that you receive as a contractor or consultant. For those that get reemployed into the federal government after retirement, the gross income that you earn before your agency offsets your salary will count towards your earnings limit. And then lastly, any net profit from self-employment will have an impact on your income limit. If your earnings exceed the annual limit, then you will have to report your income to OPM. The survey to report your income are mailed out every year in the spring to federal retirees who received the supplement during the past benefit year that runs from July 1st to June 30th. However, the earnings test is always based on the income from the previous tax year. So, in other words, the supplement survey that you receive in the spring of 2024 would pertain to the income that you earned during the 2023 tax year. If your earned income is under the set limitation, then you don't have to worry about filing the report unless your pension had been previously reduced in a prior year. If your earnings were more than the income limit, then your supplement will be reduced by $1 for every $2 over the threshold level. So, as an example, let's consider Peter, who retired as a regular FERS employee at his MRA age of 57 on September 30th, 2023. Peter earns a monthly supplement of $1,600. After his retirement, Peter immediately starts working as a government contractor, earning an annual salary of $120,000. From October through December of 2023, Peter earned $30,000 in income, which exceeded the 2023 earnings limit by $8,760. Peter will be required to report his income to OPM around springtime of 2024, and his FERS supplement will be reduced starting in July 2024 by $4,380 per year or $365 per month. As a result, his monthly pension will drop from $1,600 per month to $1,235 per month starting in July 2024, which will be reflected in his August 1st pension payment. If Peter continues working his contractor job throughout 2024 and earns his full salary of $120,000 during the year, then his 2024 earnings will exceed the 2024 income limit by $97,680. Since his monthly reduction would exceed his monthly benefit amount, Peter's supplement would be eliminated starting in July 2025. Now, if Peter stops working at a later date and is still under age 62, he can contact OPM to have his supplement restored or recalculated. So, in summary, for many federal retirees, they will never have to worry about the earnings limit because all of their income will be exempt from the earnings test. But if you plan to work after you leave federal service, then there's the potential that your supplement could be reduced or even eliminated. If you received any value from this video, please click the like button. You can also subscribe to our channel to get more content like this. If you're interested in seeing how we help our clients at Fedway Financial get the most out of their money and federal benefits, please visit our website at www.fedwayfinancial.com. Thank you for watching, and we'll see you on the next Money Briefing.